BHP Billiton posted a 22% rise in its December quarter's iron ore output versus the same period a year ago. Year-on-year, copper production dropped 7% in the December quarter, but on a quarter-on-quarter basis, copper production rose 27%. Leigh Bregman, a resource analyst at RMB Morgan Stanley, joins us now at the desk to unpack this a little further. Thanks so much, Leigh, for joining us today. Well, we've got BHP in the spotlight today, and as I said, forecasts for iron ore production this year exceeding guidance after quarterly output jumped by a fifth, and that really shrugging off some of the expectations for sluggish growth coming through from China specifically. First up, overall impressions of the headline numbers that filtered through from BHP.
Slightly ahead of expectations, but then this is BHP. Operationally, they have a habit of delivering. So at one level, it's sort of in line to slightly positive. I don't think this in and of itself is necessarily in the very short term going to drive the share price. It is outperforming at the moment. But realistically, I think the general mining sector as a whole, and not just BHP, aren't going to trade sort of in the medium term on anything specific to the company unless there's a disaster or an amazing achievement. It's really going to be driven by the global macro environment and wider market performance.
Within that macro environment, China is in focus and the kind of growth we can expect to see there. Earlier this week, we had encouraging numbers come through in terms of GDP numbers for the fourth quarter, but still that economy growing at its weakest pace in 2.5 years. So what's your view on that growth and just how supportive the demand scenario is going to be for a player like BHP?
Well, I think the place to focus, it's such a big question, and I think it's one of the key debates. If you look at the papers at the moment, everyone's arguing it. Our view is there'll be a soft landing, but everyone's got a very strong opinion on this topic. So I don't want to necessarily touch on that. But, talking about iron ore, where there is this big growth in BHP, it's 40% of the earnings. So really what you really need to ask about BHP, and it's true of the general mining sector globally at the moment, and especially for South African general miners, is what's the outlook for iron ore? Here it's mixed. We, as a house, are forecasting lower steel production in China this coming year than previously. Not hugely down, but nevertheless down. So we are expecting a slowdown. The real question to ask with commodities, though, and this is what differentiates some commodities, the outlook for others, is what's the supply doing? And realistically, the supply outlook for iron ore is deteriorated. So you've got some incremental growth coming through, not just from BHP, but Rio and Anglo American at Kumba. But at the same time, you've got supply not coming out from India for political reasons, environmental concerns, and requirement to use it domestically, and then of course the weather in Brazil. So actually our outlook for iron ore this year is relatively bullish.
So where you've got a company like BHP spending heavily on expansion, it's earmarked a large chunk of that $80 billion capital spending program to mine iron ore specifically, makes complete sense.
Yes, in our view. I think one of the big questions is this, and it's one of the big debates that investors have at this point in the cycle, is prices are elevated. How much longer are they going to stay elevated is a key question. Everyone believes that there's more downside, I think, in the long term. A lot of investors feel in iron ore prices and a lot of commodity prices than upside. And I think what a lot of investors would like to see is not the companies investing the money in very expensive capex, because the cost of building new projects is going through the roof at the moment. It's blowing out. It's well ahead of multiples of inflation. But to actually return capital to shareholders. But we're not seeing that. The major miners, the big 5-6 miners globally, have all decided that their policy is to expand, not to return capital to shareholders.
And we've seen that expansion happen in a very big way. What are you making of the pace that BHP is ramping up its production with? Because it's certainly faster than a rival Rio Tinto, and I don't think many of the viewers realize just how much faster that pace has been. BHP Billiton's production growth running at about 10 times the rate of Rio Tinto.
I don't think one should read too much into that. I think that I don't think either Rio's or BHP's numbers were outside of the analyst expectations. Different companies have different policies and timelines for their project delivery. But I think the important thing is that someone like Vale is actually putting projects out. And there are a lot of projects that are actually going to be delayed at the moment. So I think that's less of a concern for me, the very fast delivery of BHP's projects and Rio's in the short term.
And also you've got to consider that BHP is coming off a lower base. So there's that low base effect to consider when compared to its rivals out there.
Vale and Rio, are just much larger producers in the first place. They had less to go.
Okay, so that's some of the factors to consider.
Just on that, you get the base effect because over the next couple of years, the three big Australian iron ore producers, Rio, BHP and Fortescue, are all looking to add roughly 100 million tonnes. So your base effect is enormously important, and of course Fortescue is the smallest of the three, so it's going to look even more spectacular from a growth point of view. But it's in expectations at a certain level.
The interesting thing with BHP is that it's looking to diversify even further. I mean, I was speaking to a trader at the desk this morning, and he says what's interesting for him when it comes to BHP is that they're expanding into energy pretty aggressively, and that's setting the appeal for many out there of a four-player like BHP if you're putting it up against the likes of an Anglo's, for example.
I think what's happening is you're getting a differentiation in the general mining sector. I mean, a few years ago, a lot of the general miners actually looked quite similar to one another. Had some iron ore, had some copper, had some coal, basically, was the story. And I think what you're seeing at the moment is some differentiation. BHP's always been unique in the large cap general mining space because of its oil exposure, although it's traditionally been sort of, first of all, sort of Australasian oil and gas, and then Gulf of Mexico. The very recent acquisition of Petrohawk, which is a very substantial growth project in the US shale gas, of course changes it. In the long term, we think shale gas is going to make, well, petroleum, which shale gas will be the majority of it, is going to make up 30% of the earnings of BHP. So you're buying a very different growth profile to the other miners. The debate is not whether you're buying, it's which one's better. And I think that the jury's out at the moment.
The jury's out at the moment. In your camp specifically?
We prefer Anglo over BHP at the moment, and we prefer Rio Tinto over BHP in Australia. So while obviously BHP's got a really good story, and I come back to what I said right at the beginning, is the company's kind of expected to outperform. It's in everyone's expectations. It has a spectacular record of delivery and operational performance. So at that level, this is of less interest than maybe from another mining company where it would be a catalyst to unlock value. This is just expected.
When you're looking at the valuations of BHP, because that's been put in the spotlight time and time again, and we're looking at it trading in single-digit PE territory at this stage of the game, is it warranted, or is the market overreacting a bit?
Well, there are two separate questions here. I mean, the one is how is its trading range warranted relative to its peers? And to be perfectly honest, the entire global general mining sector is trading in those things.
Yeah.
So on a relative basis, I'm not sure. The question is what's going to cause the market to re-rate. We're at peak cycle multiples. Iron ore prices, let's call it at $150 to $160 this year. No one expects them to go up materially from there. The risks are to the downside. So your earnings are very high at the moment. So the question you have to ask is what's going to drive your share price up? And the only two things I can see in the short term, in the long term, fair value is comes out. But in the short term would be a general market re-rating. So generally stock markets globally outperform, or everyone suddenly decides miners are the place to be. But my view is that'll benefit all the miners simultaneously. That's not going to benefit BHP over an Anglo-American or any of the other general miners globally.